every year if you're using a 3-year moving average. And I think it's just becoming undeniable that it is a force that especially now that institutions have to consider it as a new asset class, because we've also put out there, I actually put it out in 2016, Bitcoin ringing the bell for a new asset class.
Investors are feeling uneasy and uncertain as a result of the chaos in the cryptocurrency market and the sharp decline in Bitcoin. However, what if I told you that this steep drop might be your last chance to buy before Bitcoin soars to unthinkable heights? You read correctly. Now might be the ideal time to safeguard your financial future. Not only does renowned investor Cathie Wood view the decline as a setback, she sees Bitcoin as a completely new asset class rather than just a digital currency. The future is Bitcoin. Not only is it digital gold, but it's also a decentralized, rules-based monetary system that provides true financial sovereignty and operates without interference from the government. As conventional markets face uncertainty and hardship, Bitcoin is establishing itself as a crucial component of contemporary investment portfolios. Bitcoin is about to become a major financial force and is no longer a fringe asset. Bitcoin's position as a global powerhouse is only growing in spite of the current downturn. Bitcoin is becoming the most effective hedge against uncertainty as traditional financial systems' instability and inflation cause global markets to collapse. It's simple to panic when the market is down, but the reality is that institutional investors are realizing the potential of Bitcoin, and soon you may be wondering, why didn't I act sooner? Cathie Wood claims that before Bitcoin blows up, this might be your last opportunity to ride the wave. To better understand Cathie Wood's audacious predictions, let's examine some of the most noteworthy moments from her riveting interview. For more in-depth content, remember to like, subscribe, and turn on notifications. Thank you for watching and have fun with the video.
This year, well, again, it's a high priority. I think this this issue became a one-issue voter issue, right? And the president is going to make good on his promise because this really helped bring in the young people, and so. I do, and Senator Lummis has done, I heard she was here, but she's done an amazing job. She has an incredible staff. So I do think it will happen. Now, I know there are controversies out there. There are truly some, the confiscation of some Bitcoin. That was truly illicit and criminal and all of that. There are questions about others. And then there's the other question is, wait a minute, are you really then going to get all the way up to 1 million Bitcoin? How do you do that? How do you fund it? Well, our gold is at cost on our balance sheet. Land is at cost. I learned from Senator Lummis that a third of the land in the United States and 50% in Wyoming is on our country's balance sheets at cost. Think about that. Think about that. We could sell a little bit off and we could definitely, and same with gold. I don't know the answer to that, but as they're scraping around looking for alternatives, it becomes a diversifier, I think, because even relative to gold, Bitcoin is a diversifier. The correlations are a little higher than to other assets, but still, not quite there. There was something, the other thing I learned today was that there are 50 bills going through 22 states right now around Bitcoin reserves. So that's very interesting. Texas, Arizona, and Utah, I think, have seen progress within the last week, which is very exciting because Texas and California, each of those states is bigger than Canada. And of course, Canada is is huge in terms of a gold resource base. And in Big Ideas 2025, I guess I'm promoting that quite a bit, but there is a page where we're talking to traditional financial services. And I don't know if you're referencing this, but we list the assets and their compound annual rate of return over the last 5 years, all of them, all of the major assets. And we put in there the Sharpe and Sortino ratio. So if you don't do quantitative analysis, modern portfolio theory, all of that, you're probably not going to care about that, but they do. And I think it is beginning to turn heads because, if you look at I think it's not even the 4-year moving average, which would capture the cycle, but the 3-year moving average. Bitcoin has gone up every year if you're using a 3-year moving average. And I think it's just becoming undeniable that it is a force that especially now that institutions have to consider it as a new asset class, because we've also put out there, I actually put it out in 2016, Bitcoin ringing the bell for a new asset class. We showed the correlations of returns. The correlations still, even though traditional investors are getting involved, the correlations with other assets still very low. It's absolutely essential that institutional asset allocators take a look at this asset. If they don't, they're not doing their fiduciary responsibility. So we're trying to help ease them, provide a bridge. Okay, we're talking your language. Bitcoin is not only a technology, it's not only one of the biggest ideas ever, the global monetary system, rules-based, digital, private, all of that. But it is a new asset class. And when you present investors with those three and they're not knowledgeable enough, it's a little bit threatening, or they feel a bit vulnerable. So we are trying to bridge in with, okay, we're going to talk your language. You need to look at this new asset class.
Bitcoin has become a new asset class and is no longer merely an experiment. Cathie Wood acknowledges its indisputable ascent, noting that Bitcoin has demonstrated steady growth even when examining a 3-year moving average. Institutions can no longer ignore it as traditional markets struggle and inflation soars. Bitcoin is a good hedge against uncertainty because it is still uncorrelated, unlike traditional assets. With Bitcoin and the US dollar serving as the world's reserve currency, Wood thinks we are living through a financial revolution. Cathie Wood believes that as consumer confidence declines and uncertainty increases, the last cracks in the US economy's rolling recession are starting to show. She supports tax cuts that are retroactive in order to boost productivity and lower inflation. In the meantime, 50 bills pertaining to Bitcoin are presently passing through 22 states, demonstrating the currency's growing popularity as a strategic reserve asset. Even selling US assets to finance Bitcoin holdings has been discussed. According to Wood, the dollar, gold, and Bitcoin will coexist in the global financial system in the future. To learn more about her vision, let's examine some additional excerpts from her interview.
If we have a world which we believe we've entered, where 5 major innovation platforms involving 15 technologies are converging and disrupting the entire traditional world order. Well, what in that world? Now, I'm very confident in our research and in our projections, but if I'm someone who doesn't do what I do all day long, and I'm studying all the ways to hedge against, all the uncertainties out there, ground shifting underneath us technologically, geopolitically, what is the one thing I am certain about? I am certain about 21 million units. I am certain about that. And there have been, for those of you, I don't know if we have an economics-oriented audience here, but Art Laffer actually helped us write that first white paper on Bitcoin. And he said, after he agreed to collaborate with us, and he said, you know, this is what I have been waiting for since the US closed the gold window in 1971. He's been waiting, he's 85 now, I think. This has rejuvenated him. And he's proselytizing to the rest of the world, El Salvador, Suriname he was in, Argentina. And he's beginning to help them understand how important this source of certainty will be to them. And, you know, one of the biggest things that has surprised us, when we were brainstorming about Bitcoin in the early days of Ark, our working assumption was that the early government adopters of Bitcoin would be in the emerging markets because they live in such a chaotic world that is, you know, they are battered every now and then by the dollar's appreciation, and which, you know, they've got a lot of dollar-denominated debt. They run their countries on their own currency, and they're losing out constantly. So I've been very surprised that the U.S. really, I mean, yes, El Salvador was, you know, was there, but the U.S. is leading the charge here, and I think it's going to serve us very well over time. I've started, you know, I sometimes get to thinking about something, and if I'm not hearing about it in the press, and I'll just start posting on X. And so, yes, this has been my latest. So the velocity of money is the rate at which money turns over. Now, in an environment of fear, which is what we have right now, in an environment of fear, what do people do? Well, you've got, I'm going to say 30% of the labor force, which is in either government or quasi-government, including healthcare, education, and so forth. 30% or more of the labor force is saying, am I going to have a job? How is this going to filter down to the state and local sector? That's where the bulk of the jobs are. So there's fear. And that will slow the velocity of money down. So it hit me when Walmart came out and said, 2025 is going to be a big slowdown. Last year they had 5% same-store sales. Now they're saying it's going to be 3 to 4%. So that's a 30% deceleration in the growth rate. So that's a change and a change. So that's, for them to be so sure now, they're seeing something they do not like. So part of it is fear, but there's another reason people will delay purchases or business activity. If they think their tax rates are going down, and again, lesson from the early Reagan years, if they think their tax rates are going down, they're going to wait and hold off on a lot of activity until they understand what that means. And if you listen to Kevin Hassert recently, he's been talking about the quid pro quo between tariffs and taxes. What that means to me, given that Art has been an advisor to every president with the exception of 2 in the last, I'm going to say 30, 40, 50 years, is that we're moving towards a flatter tax system and lower rates for everyone. That's Reagan Revolution. Reagan delayed the impact. The full 25 percentage point reduction took 3 years. The economy fell into 2 recessions. Why? Well, there were a lot of other reasons, but we learned very quickly in 1983, oh my gosh, we went into a boom. They were all waiting for that last time. So you've got fear of unemployment. You've got, wait, how much of a better deal am I going to get out there? And the same thing with pricing. If people think prices are coming down and interest rates are coming down, as President Trump is telling us, and long rates have started coming down. Nobody believed that was going to happen. They're going to hold off for the lower rates and lower prices. So those are 3 delays. Now, what does this mean? Today, we got Atlanta's GDP now estimate is negative for the first quarter. Negative GDP. Now, we have been saying, and many people didn't agree with this point of view, but I think it's playing out now. We've been in a rolling recession since the Fed started raising rates in 22. It jacked them up at a record-breaking pace. We've never had anything like that. You go back to Volcker, everybody remembers 20% interest rates. Yeah, went from 10 to 20%. That's a 2-fold increase. We went up 24-fold in little more than a year's time. That was a major shock to the system. And I think we have been one sector after another moving down. The one that did not capitulate was the consumer. And it did not capitulate because of the high-end consumer. Well, guess what? In the last University of Michigan consumer sentiment survey, the high-income earners' confidence cracked. So I think we're going to see a completely different tune in the next few months.
With Senator Cynthia Lummis reintroducing the Bitcoin Act, the competition to make Bitcoin a strategic U.S. reserve asset is getting more intense. The argument over Bitcoin's place in national policy has intensified. This proposed law further establishes Bitcoin as a major global monetary force by outlining a daring plan for a $1 million Bitcoin acquisition program under the U.S. Treasury. Institutions can no longer afford to ignore Bitcoin, according to Cathie Wood's long-standing argument. It's a new asset class, not just a technology or an investment. Bitcoin provides a hedge against monetary instability as the Federal Reserve struggles with inflation and economic uncertainty. Wood thinks that, like the rolling recession she has been predicting since 2022, institutional adoption of Bitcoin is unavoidable. Aggressive interest rate increases have caused shocks to the economy that have affected capital spending, housing, and automobiles. She believes that the U.S. is about to undergo a significant financial transition as a result of declining consumer confidence, particularly if tax cuts and productivity increases are implemented. Together with the U.S. dollar, Bitcoin's position as a global reserve asset could be solidified in this new setting. In the meantime, Michael Saylor estimates that if the U.S. regularly purchases Bitcoin, it could generate an astounding $16 trillion in profits. In his ideal future, a calculated buildup of up to 5.5 million Bitcoin could both eliminate the national debt and solidify American leadership in the digital financial era. America's adoption of Bitcoin as a national reserve asset may now be a matter of when, rather than if, as bills pertaining to the cryptocurrency are making their way through 22 states. What do you think as we come to a close? Will Bitcoin eventually become a national reserve asset in the United States? Please share this video, leave a comment below, and remember to hit the like button. Please remember to like and subscribe, and thank you for watching.